Hello and welcome to Financial Intelligence. In this video, I want to talk about Michael Burry's bet against Cathie Wood's ARK Innovation Exchange Traded Fund. I found this topic interesting because Michael Burry and Cathie Wood are two of the most famous investment icons. The fact that these two successful investors have different views on the current market situation tells us a lot about how divided opinions can be when it comes to the stock market, even among the experts. If you like the type of content that I provide, subscribe to this channel and also give this video a thumbs up and hit the notification bell so that you won't miss any of my future videos. Earlier this year, Michael Burry, the big short investor, shocked the stock market investors when he revealed a major bet against Tesla. This was Michael Burry's largest position in Q1 of 2021 with the nominal value of $534 million. Also notable was Michael's aggressive positioning for a surge in inflation by betting against TLT, which is iShares 20+ year Treasury Bond ETF. I have discussed these bets in more detail in another video, which I will link here. As part of US financial regulations, all institutional holders of equities must report their latest transactions in a 13F form per quarter. The latest 13F form released by Michael Burry's Scion Asset Management shows yet another notable surprise: a big bearish bet against Cathie Wood's ARK Innovation ETF. I will add the link to their 13F form in the description box below so that you can check it out if you are interested. Specifically, as of June 30th, 2021, Scion owned put contracts against 235,000 shares of the ARK Innovation ETF. The nominal value of this position was roughly around $31 million. Note that Michael Burry was already indirectly betting against ARK Innovation ETF through purchasing a massive amount of Tesla puts earlier this year. That is because Tesla is ARKinvest's biggest long position across most of its ETFs. Now, Michael Burry has taken the fight directly to Cathie Wood. In a now deleted tweet in February, Michael Burry warned that Cathie Wood's promise of disruptive growth and transformative technologies would not be realized. He tweeted, and I quote here, "Shades of Gary Pilgrim and PBHG growth from the 1990s, or Gerald Sy and the Manhattan Fund in the 1960s. He essentially likened ARKinvest to two failed aggressive growth funds in the past, which heavily deployed momentum investing strategies. ARKinvest is defining an era," Burry continued. "If you know your history, there's a pattern here that can help you. If you don't, you are doomed to repeat it." In other words, Michael Burry believes that Cathie Wood is investing billions into companies that have new innovative technologies but little to no revenue. Therefore, he thinks that Cathie is betting for perpetual growth in these momentum stocks that might not materialize in the long run. In fact, Cathie Wood and ARKinvest have struggled to maintain their momentum this year amid concerns about lofty valuations and accelerating inflation. Cathie created ARK in 2014, focusing on managing active stock portfolios in an ETF format. Her flagship ARK Innovation Fund has returned an average of nearly 40% annually over the past 5 years. ARK focuses on disruptive innovations that can potentially change the way the world works. Cathie Wood has focused mainly on growth stocks including Zoom, Coinbase, and Shopify, and counts Tesla as its largest holding. And speaking of Tesla, Michael Burry also added to his massive bearish bet against Tesla as revealed in the latest 13F forum. This position was increased by over 34%, representing a nominal value of $731 million as of June 30th, 2021. The bet against Tesla is Michael Burry's biggest position. Michael Burry has repeatedly criticized Elon Musk and his electric vehicle company for overpromising and underdelivering, and warned that Tesla's valuation is not sustainable and its stock will collapse. I have discussed this bet in more detail in another video, which I will link here. Another interesting point is that Michael Burry is only bearish on established tech companies that do not have any meaningful revenue to justify their high valuations. In fact, he is in favor of investing in more established tech companies that have become the de facto monopolies in their industries. Two main examples of such companies are Facebook and Google. Michael Burry is using long call positions on Facebook and Google as a hedge against his short positions against Tesla and ARK Innovation. For example, he is long 941,000 shares of Facebook through his calls. This position is his second largest position and is worth about $327 million. Michael Burry is also long calls on 91,000 shares of Google, which is worth $230 million. In summary, I found it interesting that two of the most famous investors have such divergent opinions on the stock market. It'll be fascinating to watch and see who is going to be right at the end. I hope that you liked this video. If you have any recommendation or suggestion, add them in the comment section below. Don't forget to subscribe to this channel and like this video, and also hit the notification bell so that you won't miss any of my future videos. Thank you and take care.